This is Len Haydachuk. Thank you for listening to our Financial Lens episode titled Interest Rate Increases, Winners and Losers. Unlike most Financial Lens episodes that are relevant yet somewhat timeless, this Financial Lens episode is very specific to our current situation. Let's take a look at what has happened over the last 6 months. In response to the high inflation, the Federal Reserve decided to implement a series of increases in their interest rates. Over the last 6 months, we have seen 5 rate increases, a total of 3% during that period of time. The last 3 months, we have had 0.75% increase sequentially over 3 months. The Federal Reserve rate is now between 3 and 3.25%, a 3% increase compared to 6 months ago when it was practically zero, between 0 and 0.25%. Well, what are the implications? Well, when the Federal Reserve increased the interest rates, virtually all investments lost money. The stock market lost over 20%. Bonds lost 15%. Gold lost money. Gold, which typically is supposed to be safe, so much for safety, lost 12%. And real estate in the form of the ETF XLRE lost almost 20%. Virtually every investment lost money. In addition, other losers are future borrowers. The cost of borrowing has gone up significantly from everyone who is looking for a business loan to a mortgage to even credit card debt. So everything has lost money across the board, and of course, borrowers are in a worse financial shape going forward. Has anyone benefited? Has this interest rate increase helped anyone? Well, the answer is yes, it has. For folks who have been sitting on the sidelines with cash and have what we call dry powder, this is a very good opportunity to put your money to work and get better results for it. You can put money into fixed interest rates that are much higher than they were before, and you may even find this to be a good opportunity to put your money into the markets, something that's maybe a little riskier to take advantage of the rebound. Other investment opportunities are folks who have had investments who were not interest rate sensitive. For example, CDs. If you have a CD, you may want to consider cashing out the CD. The penalty on it is very low, and put it in an instrument that is a much higher interest paying vehicle. Also, folks who have annuities, specifically fixed rate annuities or fixed indexed annuities, have an opportunity to replace their annuities with better rates. Even folks who have annuities that have a surrender charge may benefit from replacing their annuities with other options that have bonuses that will cover the penalty and put you into a better rate for the rest of the life of the annuity. So now that we have better interest rates, this is where we want to look at taking advantage of what's available. For folks who have lost money in investments and are really wondering if they should make a change in their investment, my question to you is, should you ever have been in that investment? If that investment was never really truly appropriate for you, you may want to consider what your investment strategy was in the first place. However, if you have lost money in an investment, we expect that it will rebound over time. So keeping the course and keeping what you had in place is probably the best strategy. We'll look forward to helping you any way we can. Thank you for listening to the Financial Lens episode titled Interest Rate Increases, Winners and Losers.